In today's video, we talk about internal structure and external structure. So a lot of you guys don't even know what internal structure and external structure means because probably you are new to trading, but this video will help you understand better. And for you guys that know what internal structure and external structure means, probably you don't know how to use it very well. This video would help you correct that and you become better. So if you haven't subscribed to this channel, please make sure to do so and share this video with your friends and your folks that are interested in trading. And remember, we have our Cyber Monday and Black Friday. They are still on, so you can make good use of this opportunity to register for our mentorship and enhance your knowledge much more better. So without wasting much of your time, let's go to what we have for today. So straight up, internal structure, external structure. How can we use the internal structure and external structure to our own benefit? Now, for you all, you know what external structure is and what internal structure is, but you don't know how to use it very well. And for some people, they don't even know what it is, and so on and so forth. Now, internal structure and external structure is what you want it to be. It all depends on the time frame you want to make it appear. Okay, so let's say you want to see market structure on a 4-hour time frame. You could say internal structure should be on the 1-hour time frame, 30 minutes time frame, or 15 minutes time frame. Just make sure it is 2 times lower than the area you want to see the bigger market structure. And why do we call a particular structure an external structure, and why do we call some an internal structure? Now let's take, for example, if we see patterns like this on the daily time frame. Okay, if we see patterns like this on the daily time frame, we need to know that the market is signaling bearish. Okay, the market is signaling bearish, and for some cases it will take a very long period of time. Not even some cases, in most cases it will take a very long period of time before it gets to your intent order block, whichever way you want to take the order blocks for. Okay, or you want to analyze this order block. I like using it this way. For those of you that know me very well, I like doing it this way for my own order block, and for some other people they want to choose this way. Whichever way you want to choose, that is fine for you. Okay, or that's fine with you, whichever way you understand these things. So that's fine. Okay, now you're gonna waste time to get to this area, but during that period the market needs to buy a reversal buy to get to this area. Now that reversal buy, you can see a lot of opportunity on the lower time frame, so that makes it an internal structure. Now what am I trying to say in a nutshell? That this whole area right now, if this area is supposed to, or if this area happens to be on a daily time frame, or let's just say 4-hour time frame, let's call this whole area 4-hour time frame. So let's say this is your 4-hour time frame, so we'll name it 4-hour time frame. So this is your 4-hour time frame structure. So your 4-hour time frame structure is signaling sell. Me and you, we all know that these things are going to take time before it gets to that area. Okay, for 4-hour time frame, it could take days, it could take 2 days, it could even go up to a week to get to that area. So we want to, we want to get opportunities from the internal structure. Okay, now this is how to approach it, and this is how you could get that opportunity. The first thing you need to do is that you need to go to a time frame 2 times lower than that 4-hour time frame. Now before you do that, all you need to do first is to map out the high, which is the high of that break of structure, means the highest level it has gotten to. You map it out. You could just put a sign this way. Okay, horizontally you could put a sign this way. Okay, you could put one at the downside. So you are looking for that structure that took you this way up to this level. So you want to enjoy the benefits that these structures are going to bring for you as well. So all you need to do to enjoy that benefit is to go to a 2-time lower time frame to enjoy that benefit. For me, I do like to use the 15-minute time frame to enjoy that benefit. Now let's take, for example, Okay, let's say we have it this way now. Let me explain it. Now we have it this way. This is what you are expecting prices to go back this way on the 4-hour time frame. This is the 4-hour structure. This is the 4-hour structure. Now, for prices to go up to this place, to reverse, to continue selling down, we have to have a what? A buy to that upside. Remember, we are looking for prices to come and hit this area, okay, one of this other block area, and continue going in its intent direction on the 4-hour time frame. Now, within the period of time that you'll be waiting for these things to happen, you can enjoy the benefits that actually comes out from the lower time frame, and that's what I'm trying to explain. Now, in the lower time frame, you could see something of this pattern. You could see the market start buying in this way, okay, start buying in this way, start buying in this way, and it gets to one of this zone, probably comes down. You can have it coming down this way, okay, you can have it coming down this way, you can have it, you know, reversing again, going up this way, then finally coming down to this level. This could occur in the market, okay, this could occur in the market, and for some reasons you could just have it directly. But in occasions like this, it could be some economic data, very high impact news that will make 4 hours just go directly to that other block. And in most cases, probably the area or the space between, you know, this zone to this zone is kind of, you know, it's kind of close, so it could just happen within, you know, a twinkle of an eye. But in more of these cases, you are going to have it this way, okay, trying to, you know, pull yourself gradually to that area without breaking this down, trying to, because once you break this down, it is another break of structure. So they'll be trying gradually to pull yourself into these zones, okay, before they start coming down in the intent area. And it goes the same way whenever you want to, you know, buy, whenever you have a buy order as well. So let's say you have a buy order this way, you start seeing it coming down this way, okay, before it pulls up, it can come down this way, come down this way, then finally pulls up to this level. Now this area coming down is an internal structure, and I'm going to teach you how to enjoy these things in this few minutes. Now, like I said, the first thing you need to do is to what? Map out that area, okay, in the internal structure. You need to map out that zone in the internal structure, okay. This is the recent zone in the internal structure, in the external structure rather. I'm sorry for that. So you need to map out that zone in the external structure. I'm sorry. So you need to map out that zone in the external structure. Let's say this is a break of structure, okay, on this area. So you've mapped out the recent high and low of that area, okay. Now all you need to do is to go to the lower time frame. Like me, I said I like using 15-minute time frame. I'm being truthful to you. Some people might suggest 1 hour time frame, and why I would suggest 1 hour time frame is that 1 hour time frame is slightly closer to the 4 hour time frame, so you might most likely see similar things you are seeing on the 4 hour time frame on the 1 hour time frame. But when you take it a bit lower to, let's say, 30 minutes or 15 minutes, then you are going to enjoy classic benefits in this thing, okay. So the first thing you need to do is to identify a pull down. Let's say you are looking for buy, you need to identify a pull down this way. So once you identify that pull down this way, you take the reversal coming here for a sell, then you start coming down, okay. Now during this period, you need to identify the areas. Remember, the intent direction is still bullish on the 4 hours, so it's possible that that pair, that instrument would still go bullish, to be honest with you. So you need to map out those zones that you should avoid, okay. Those zones are zones you should avoid taking trades, because trades can just go in the opposite direction or in the normal direction of the higher time frame whenever prices get to that level, and those places are your other blocks for your higher time frame. So you need to identify those other blocks for the higher time frame, okay. Having identified that area, you need to avoid opportunities that come in that area, okay, and follow the normal direction, which is bullish. Now let's say you've been taking the cells here, one cell, you took this cell, okay, and so on and so forth. You can see that immediately it came down to this area, it started buying. Immediately it came down to this zone, it started buying. So you avoid any, trades that come towards these zones that are left, for the other block. And that is why I use my Fibonacci, because my Fibonacci is going to give me extra layers like this zone. So I would know that these zones are zones I should actually avoid. Okay, it's going to give me 2-layer zone. Okay, you can see it gave me 2-layer zone. Okay, means I should start avoiding this area. I should start looking at buys at this area. Okay, all this area I should start looking at what? Buys at this area. So for you to enjoy this benefit, you need to map out those zones. So once you get to those zones, you can use the higher time frame direction and play along with those zones. Okay, so that you won't be caught, you won't be caught on fresh. Okay, or whatever you call this thing. So you won't be caught on fresh. So you understand, to enjoy this benefit, the first thing you need to do is what? Map out your highs and your lows, okay, of that higher time frame. Then you can enjoy the benefits that comes there on a much more lower time frame. You can enjoy lots of benefits that will come there on much more lower time frame, depending or until it gets to the other block area on the higher time frame. Remember, you need to map out those areas that you feel that the market can drastically have a move. Okay, you need to map out those areas there and avoid taking trades there and follow the overall direction. Okay, now let me explain this in a more pleasant area on the chart. Now let's say this is a 4-hour time frame, because this is a 4-hour time frame here. Okay, remember this is a 4-hour time frame, so we're coming down this area. So let's just map out here and here for our 4-hour time frame. So this is our 4-hour bullish structure. Like I told you, that if you don't map out that area, it might give you a fake opportunity like this, and follow that intent market direction. That's why I said you need to map out those areas to avoid those areas. Those areas are what we call sensitive areas. As you can see, using my Fibonacci tools, they are going to release those sensitive areas you should avoid on the chart. Okay, now you can see on the 4-hour time frame, it's just a single structure without opportunity. Means you need to wait for the market to get to this area. Like I said, these things might take days, but you want to enjoy other benefits that comes out from these things on the lower time frame, and we're going to do that right away. Now this place started reversing on the 6th of November. Okay, when did we get this opportunity? Finally, we got it on the 7th of November. But we want to enjoy other benefits that will come here, and we want to see if we actually got other benefits. Now all I need to do is to go to a 2-time lower time frame. Okay, for me, I like using 15 minutes. Now let's go and spy on that area, and let's see if we had some bullish opportunity, bullish reversal opportunity at that zone. So I'm coming. Now we are at that zone right now. Now look at that zone. Look at that zone. We had this bullish opportunity. The first one, we had this. Okay, for me, we had this nice opportunity. So this is one bullish opportunity you could just take as well. So you could take this one. Okay, one bullish opportunity. We had this nice one. Now as it broke that structure, reversing again, this is the low area and this is the high area. We had another one. Okay, we had another one. We had another one here. Okay, so this is another break of structure. So we have another break of structure here. We have another break of structure here. You understand? We have another break of structure here. Now immediately it tapped into sensitive areas, like I said. Now let's go back to our 4-hour time frame. Okay, our 4-hour time frame is telling us that that zone is a sensitive area, and that's why I said when you get to that zone, you avoid trades there. You can see that immediately we did not get any opportunity again. We had a change of character from that time the market started, you know, coming down. You can see from that period we started coming down because this area is a sensitive area for the market. So after the whole market structure that we had two bullish trades before we get to that area, the market started coming down. So with this kind of strategy, you could enjoy almost all the opportunities in the market coming from the bullish to the bearish opportunity, and you can still take this trade as well, okay, if you wanted to take the 4-hour time frame. Okay, now this is how to enjoy the benefits that comes out from the internal structure, from the external structure down to the internal structure. The first thing you need to do is to make sure that your external structure is on a higher time frame, such as 4-hour time frame. Then you can slide down to the 15-minute time frame and do it this way, and make sure you map out what sensitive areas, like I said earlier, and you are going to get perfect result like this. So without wasting much of your time, this is all we have for today. See you guys next week, and make sure you subscribe to this channel, like this video, share to your friends and family. You can backtest this strategy and you are good to go. See you guys.